Picture this. You're not in an office. You're in a Roman Colosseum. In one corner stands a raging bull, hooves tearing up the sand, ready to charge upward. In the other, a massive bear swipes down from above, with claws that could crush bone. Between them? Your money, your future, your peace of mind. Every day, these two beasts battle for control of the market, and most investors don't even realize they're standing in the middle of the arena. Today, I'm pulling back the curtain on the most important war in finance. Welcome to the bull versus bear battlefield. Before you pick a side, you need to know why these specific creatures rule Wall Street. The answer isn't in a textbook, it's in how they kill. A bull thrusts its horns upward, goring its enemy from below. That's your market climbing higher, defying gravity. A bear? It strikes down from above, slamming its prey into the dirt. That's your market in free fall. But here's the twist. This isn't modern slang. These terms were born in 18th century London coffee houses, where traders first started calling optimists bulls and pessimists bears. Some say it came from a satirical writer named John Arbuthnot, who created John Bull, a British gentleman with a bull's head who constantly fought a bear in political cartoons. One famous brawl even took place inside the London Stock Exchange itself. So when you hear these terms, you're not just hearing market jargon. You're hearing 300 years of financial history. Let's meet the optimists. The bulls. These aren't just investors, they're believers. They see a world of endless growth, where every dip is a buying opportunity, and tomorrow's price is always higher than today's. When bulls control the market, magic happens. IPOs explode. Portfolios swell. The news cycle spins tales of new economies and unstoppable trends. But here's what they won't tell you. Bulls are gamblers at heart. They bet on the future, often ignoring the cracks in the foundation. Ilya Ivanov, a financial analyst at Market Power, explains it perfectly. A bull market is a market of growth, usually during favorable economic conditions. Bulls believe in further market growth, so they open long positions, they buy securities, hoping to sell them more expensive in the future. This optimism can last for years. The 1990s bull market ran for 12 years straight. But remember, gravity always wins eventually. Now, the other side. The bears. While bulls chase the sun, bears feast in the shadows. They don't just survive crashes, they profit from them. Bears are the realists, the skeptics, the ones who read the fine print, while everyone else chases hype. They borrow shares they don't own, sell them high, then buy them back low when the market bleeds. The difference? Pure profit. As Ilya Ivanov notes, in a bear market, investors see a declining trend and open short positions. They borrow shares from a broker, sell them, then buy back cheaper when prices fall further. The difference between selling and buying is their profit. But bears aren't just destroyers. For smart long-term investors, a bear market is a Black Friday sale on steroids, a chance to buy quality assets at bankruptcy prices. The longest bear market in its history? The Great Depression, from 1929 to 1932. It destroyed fortunes, but it also created the next generation of millionaires. The question is, which one will you be? But wait, the financial jungle has more predators than just these two. Welcome to the full ecosystem. You've got sheep, novice investors, who follow the crowd straight off cliffs. Pigs, greedy traders, who hold too long, waiting for just a little more profit until the market turns and slaughters them. Rabbits, nervous types, who panic sell at the first shadow. Ostriches, who bury their heads in sand when bad news hits. And then there are the whales, institutional investors, who move markets with a single trade, and the wolves, aggressive traders, who hunt in packs, using any means necessary. Don't forget the unicorns, startups valued at billions, before they even make a profit. Or the black swans, those impossible, unpredictable events that change everything in an instant. You're not just choosing between bull and bear. You're deciding which animal you want to be in a food chain where only the adaptable survive. Here's the brutal truth that separates amateurs from professionals. Markets are cyclical. Bull markets don't last forever. Neither do bear markets. The economy breathes, inhales growth, exhales recession. The 1990s bull run died in 2000. The 2008 crash gave birth to an 11-year bull market. COVID-19 triggered a bear market that lasted mere weeks before the bulls charged back. Ilya Ivanov puts it bluntly. The economy is cyclical. Bull markets will always alternate with bear markets, and vice versa. This isn't a bug, it's a feature. The question isn't if the market will turn, but when. And more importantly, will you be ready? Smart investors don't predict the weather, they pack an umbrella and sunscreen. They build portfolios that survive both summer and winter. Because in this arena, the only guaranteed loser is the one who thinks today's trend is eternal. So here's your mission, should you choose to accept it. Stop being prey. Start being the predator. Open your brokerage account right now, not tomorrow, not next week, and look at your portfolio. Are you all in on growth stocks, betting everything on the bull? Or are you sitting in cash, paralyzed by bearish fear? Neither strategy wins long term. Diversify. Learn to short. Study the indicators. Join a community of serious investors who don't just follow trends, they anticipate them. Subscribe to this channel and hit the notification bell because next week I'm breaking down the exact technical signals that predict market reversals before they happen. Drop a comment below. Are you team bull, team bear, or something more dangerous? The arena is open. The beasts are circling. Your move.